I'm Scott Stauffer, co-founder and CEO of Scale Matters. Welcome to another episode in our webinar series that we call Bridging the Gap Between Finance and Go-to-Market, where we're trying to provide thoughtful content that helps to create alignment between finance leaders and revenue leaders, hoping that that helps to accelerate growth. Before we jump into today's topic and introduce my guest, let me just give you a little bit about me and Scale Matters. I've been doing this for a long time, as you could probably tell just from the looks. I'm the founder of Scale Matters. This is my fifth CEO gig over the last 30 years, one which ended up in an IPO, a couple other good exits, quite a bit of experience in the SaaS space, and in particular sort of fashioned myself as a quant CEO. So very much committed to data-driven decision making, modeling, et cetera, to help optimize companies. And that's sort of the genesis of Scale Matters. Revenue and finance leaders come to us when they're basically struggling to answer important questions like, I don't know, what is the ROI of our different channels that we use to source prospects? Or what's the root cause of our recently declining win rate? Or is my sales team properly sized, right, in relation to the top of funnel investments? In almost all these cases, their company's go-to-market data posture is not really set up very well to help them answer these questions, and that's really where we come in to help. And I'll give a little bit more on us towards the end of the webinar, but let's get back into today's topic, which is how to unlock revenue with AI-native go-to-market. We are joined by Dave Boyce, who's the executive chairperson and EVP of product at Winning by Design. And they've done some really good research to understand kind of the growth dynamics of AI native companies and how those learnings can basically be leveraged to some extent by any company to reignite growth. And that's really what Dave's going to help us understand better today. So, Dave, welcome to the show. If you want to give a few minutes on yourself.
I am the executive chairman of Winning by Design. Thank you. I have a book coming out next month on a lot of these topics, AI and product-led growth, kind of the automation that we're driving into GTM. And a lot of that's what we're going to be talking about today. So I think it'll just come naturally in the conversation.
Cool. Why don't I go ahead and I'll stop sharing, Dave, and let you drive it from here. And just for the audience, we're going to let Dave kind of go, hopefully uninterrupted by me, and to make sure that we get the narrative through. And then Dave and I'll go into some back and forth after that, just to dig a little bit deeper.
That sounds perfect. And I think you gave me a budget of 10 to 15 minutes. Is that right?
Yeah, I'll cut you off at 20 if we get too far.
Got it. Well, I'm going to wind up and go fast. So hopefully, people can lock in. We're just going to walk through kind of the theory, the research, as you said, Scott, kind of the core principles, and then we can just take it anywhere you want after that. But I'm going to go pretty fast. So buckle up. So today's SaaS environment is tough. I think everybody knows that. I'm going to show you some data. Driving revenue is harder than it ever has been. One of the key things for people of our age, our vintage, Scott, is we thought that we'd be teaching our teams how to do it like we did. And instead, how we did isn't going to get us there because the world is changing right under our feet. And so it turns out if we want to reignite growth, I'll show you what I mean by a growth stall. We're going to have to actually do stuff differently, which means we got to crack stuff open. We got to re-architect our GTM systems. We're not just teaching our teams to do it like we did. We're actually rediscovering how to do it in a way, and we're learning a lot from the AI natives. So once we have that figured out, we'll use AI as a force multiplier. Totally get it. But what are we actually going to do? Like which playbook, if these playbooks aren't working, which playbooks are working? And, a really sobering thing is we've worked with over 1,100 companies, Scott. And, and there is a clear disturbance in the force right now. Like we are seeing companies get to 10 million, 20 million, 50 million, 100 million without employees, with fewer than 10 employees. And then to 500 million, which is, Cursor, I'm going to show you. Actually, I don't even know if I'm going to show you because I cut that slide because we only had 10 minutes. But Cursor just got to 500 million with fewer than 100 employees. So AI native companies are not hiring dozens of people to grow from 1 to 100 million. They're not. They're doing something different. So what is it that they're doing and how can we learn? Now here's the vexing thing. The market doesn't care where the growth comes from. The market just wants growth. Like, we from 2022, we kind of got our worlds got rocked. The zero interest rate kind of policies went away. Growth at all costs became not an option. We used to hire 1 unit of quota capacity, get 1 unit of quota delivery. Hire 2 units of quota capacity, get 2 units of quota delivery. That we couldn't do that anymore because it turns out it was unscalable. But look, the market wants it, and you can see it in valuation multiples across the x-axis left to right. Less than 10% growth, 10 to 18% growth, 16 to 25, 18 to 25% growth. That's and I get a higher and higher multiple depending on how I grow. And there are some hyper growers that are above 40%. And yeah, it keeps going. That's like the premium valuation zone. If you don't believe that, go to the public markets. This is 90 companies. And the R squared correlation between growth, it's oriented the same way. X-axis is growth rate, Y-axis is valuation multiple. Against growth alone, I get a 0.39 R squared. I'm like, okay, but what about profitability? You got to give profitability some credit. Okay, great. Then we're at a 0.40 R squared. So it almost carries no water at all. Okay, well, what if I double weight the growth and then add in profitability? Okay, now we're a little better, 0.51. But growth is doing all the work. You can't hack it. We're not going to get evaluation based on profitability and no growth. Rule of 40 is not evenly distributed. All the work goes on growth. And as we were talking about before, Scott, there was a time when we could go buy that growth. And if you look at kind of what we're paying for growth, you can see what was bought and what was earned. So back in 2021, across all SaaS companies, we're going at 36%. Today, we're half of that. Back in 2021, we only paid $1.24 for an incremental dollar of ARR. Today, we're paying 60% higher than that. This just goes to the fact that kind of doing more of the same is not working. There was a market reset in SaaS, and doing more of the same is not working. Buying growth that may or may not stick around, customers that we may or may not want to have, is not working, and we are stalling as an industry. And by the way, this happens to every company at some point in their life, no matter what. We're always going to have a planned growth trajectory. We're always going to get to a point where we're going to hit diminishing returns. Our growth is going to deviate from that. But we're seeing it in the numbers right now. Here's a north of $1 billion company. You run the second derivative on growth, and you see it start tailing off. And these are real numbers right here. They're kind of stylized, but they're real numbers. And inside of those numbers are three things. This is the revenue stack. The gray is retention. The magenta is expansion, and the light blue is acquisition. Okay, cool. We understand that. Over time, we're accumulating. That's what a recurring revenue business does. We carry our renewal base forward with us. We expand on top of it, and we go buy new customers. It turns out, because of the dynamics back here, where it's kind of harder to get growth than it was, that just to get that little light blue line to show up consistently, which, by the way, it's not really growing, right? Like, we're not in this. This is real data, and it might reflect the shape of your data too, or may not, but just get that little light blue line to show up in the current quantity, not really growing over time. We need more leads. So to get essentially the same number of new customers as we used to get in 2021, instead of needing 10,000 leads, we need 18,000 leads in this example. And yet, and here's something where I know we share a religion here, Scott. And yet, we put 75% of our attention on that light blue bar. We're forecasting and calling and trying to hit what? A revenue number? No, a bookings number. Like, wait a second. So just that little blue sliver, that little blue sliver, we put our best talent on it. We put our hiring plans on it. Our board asks about it. We review it. We review the bookings number with our CRO, and all the rest of that is opportunity that we can and should pay attention to if we want to grow over time. The net result of all of this, bringing customers in that we have to work hard to defend, paying more to acquire customers than we want, putting all of our attention on upfront, is that 82% of public SaaS companies are currently in unsustainable range. So the light blue line over there is the $1 mark, meaning I'm paying $1 to acquire $1 of net new ARR, net of all expansions and attritions and new acquisitions. $2, $4, $8. That's unsustainable. Investors don't want to fund that kind of a losing business anymore. And the point is not that it's not working anymore. It's just not working like it used to. It's not working as well as it used to. And that's a permanent state of affairs. We know that AI is entering the market and we see AI natives redefining. So, what are AI native companies doing? They're operating on a core set of first principles. I'm going to go really fast here. You're going to recognize these from your personal life because we're all customers as well as sellers. So, even CFOs have a personal life and we buy things and we go out to market and we trust and so AI native companies were built in the last 5 years. They've built these companies not assuming that they're going to hire dozens of people, and instead they are agreeing. They're just agreeing with the reality that this is how the world works now. Number one, the knowledge asymmetry is flipped. It used to be that we knew more about our product than our customer knew. Today, our customer knows more about our product than our salespeople know. You can literally go into ChatGPT right now, type the name of your company, say, give me 3 alternatives to that solution, tell me all the pros and cons, tell me the pricing, tell me the reviews, and it will give you all of that. A customer can educate herself pretty much better than a well-educated sales rep in very short order. Second, it used to be that all the information was coming, if I'm a buyer, it's coming from a seller, and maybe I'm being advised by an analyst. But now I'm getting information from, networks of peers, review platforms. I graduated with somebody who is also using it. I'm pinging her. I'm getting influencer input. I have a lot of information available to me that's not coming directly from the seller. LLMs have kind of broken that logjam wide open if the internet didn't already. And the third thing is we used to think that we controlled the process, that we sellers thought we controlled the process. Oh, you want to see a demo? Well, let me first do some discovery and we'll have a discovery call. Oh, you want to see a price? Well, let me first get through my process and then I'll be able to configure a solution and then I'll be able to give you a price. Okay, you won't give me a demo? Someone else will give me a demo. Okay, you won't give me a price? Someone else will give me a price. Information wants to be free. It's all out there and we're not in control of it anymore. So trust has shifted, control has shifted. Um, uh, and then this is the big one, Scott. If we want to grow exponentially, which we do, we want to be in that premium valuation zone. We can't build linear systems. Hire 1 unit a quarter capacity, get 1 unit a quarter delivery. That's this thing on the left. That can only deliver me linear growth. If I want to get exponential growth, I got to figure something else out. And it turns out that systematic systems systematic systems, but automated systems who don't get tired, who speak all languages, who operate 24/7, who don't take vacation, do actually have the potential to grow exponentially. It doesn't mean they will grow exponentially. We still need product market fit. We still need go to market fit. But if we can hand some pieces of this off to a system or a machine, I have the chance of growing exponentially. So what does that mean for us? We all thought that we were going to be, I'm in my 50s, Scott. You're probably in your late 40s. Um, we all thought that we were, we came up through the ranks and we were all going to go run these businesses, the way that we used to. Well, the archetype has changed over time. It used to be that in 2012, software is eating the world. Mark Andreessen, the technologist who's inventing products that really solve problems, the technologist really created value. This is Google and this like Google and PayPal and eBay and like solving real problems. Then, gosh, we got high on supply and we went out and tried to launch all sorts of stuff because VCs were throwing money at us, and we figured out, oh, we can just raise money and we can hire reps and we can scale based on money and we can go put stuff together and we can even do M&A. And the financier was able to go build unicorns. Didn't even have to be a technologist. Then we have the SaaS crash we talked about. We had to stabilize. We had to take cost out. We had, we did right size. And for just a couple of years, that was the right thing to do for a CEO. Market is tired of that. They don't want that. Like, I don't want to be stabilizing. I want to be growing. So we're back to growth, but we got to grow in a different way, which means I got to be an architect. I got to architect AI native GTM into my systems. So here's where we're going to speed up. What's my time check here,
Oh, you're good. You're good
Scott?
because you're getting to some good stuff. So
I'm
keep going.
yeah, I'm getting to some good stuff. So, look, the first thing I want to do, and you talked about in your opening, instrumenting our GTM, if we're gonna go re-architect something, we got to know what's working and what's not working. We have to know what's working and what's not working. That gray bar of retention, that magenta bar of expansion, that light blue bar of acquisition, those are all independent processes that are running inside of our business, and we got to know which ones of them are working and which aren't. And by the way, we got to know them by go-to-market motion too: SMB, mid-market, enterprise. I might have a PLG motion. I got to know that, which means I got to have it instrumented into my business. These CRs stand for conversion rate. So from left to right, this is my customer journey. That's a traditional sales and marketing funnel. Left to right, turned on its side, I get to that middle. That's what we've all really been focusing on in terms of acquiring a new customer. But then from there, that's actually where the recurring revenue begins, and all of the compounding begins, and the customer journey begins. Because then I got to onboard, retain, expand. Those are that's the gray and the magenta bars, and I need to understand how that piece of it works as well. Let's assume that we've put in a data model like that, and we can see what's working and what's not working. And let's also assume that we're not AI native companies. We weren't built in the last 5 years. We weren't built without humans, and we actually have kind of human led processes. Okay, cool. We can still measure them. We can still figure out what's working and what's not. Let me just talk about the gold, the blue, and the pink lines here. If we want to make this work better, how do we do that? We all have aspirations. That's the pink line. That's the top down that came from our board, that came from our shareholders, that might have come out of our kind of fever dreams. That's what we want to do. And we're deviating from it, as we said before. That's the bottoms up. That's what our capacity is capable of doing right now. That's the gold line. Okay, cool. So how do we do better? Like get more out of our existing capacity, and that could get us to the light blue. And then how do we do smarter? Which is like, is there stuff that I can unlock that's not in my existing capacity that I could go, that non-linear growth, that exponential growth that would get me from, let's say, the blue line up to the magenta line. All right, to do better, I can do, there's 3 ways I can do this. I can do more, I can do better, I can grow smarter. Um, and there's 2 things that we've seen, Scott. I'm fast forwarding through this, but if there's a takeaway, it's right here. There's 2 things that we've seen that can get us from that blue line up to that magenta line. So I'm not talking about do better. I'm not talking about train my people better. I'm not talking about, be tighter on discovery, have better processes. Yeah, that's going to get me from gold to blue. That's get more out of my current system. And that's great. And if we don't have everything unlocked from our current system, we should do that. But there's 2 things that AI natives are doing that would take us even beyond that. And the first one is automate everything that's automatable. So let me look at that customer journey. This view of it is through a kind of human, people powered centric, kind of sales centric lens. You can tell because it says lead gen, lead dev, selling. Like these are activities that we're doing: prospects, leads, opportunities. But what if I said, hang on a second, I would actually like my customer to get to impact sooner and more seamlessly. It seems like that's what's happening with OpenAI and Cursor and Lovable and Replit, these companies that are going to 100 and 500 million without any salespeople. It seems like customers are able to self-serve their way into impact. So what would that look like? First of all, I got to get them impact way earlier. Like I got to accelerate that. Maybe even before they've committed to pay. We're probably, I don't know the platform that we're on, Livestorm, but I bet there's a free version. I bet you're able to start free. We know that you can start free on ChatGPT. We know that you can start free on Gemini. We know that you can start free on Lovable and Replit and all these platforms. So can I get impact into the customer's hands even before? And then can I automate everything about that customer journey, or anything about that customer journey? Let's put it that way. And if I can't automate discovery or acquisition, I'm automating a lot of discovery right now with SEO and SEM, but maybe I'm not automating acquisition. Maybe I'm not automating activation. Well, you say my product's really complicated, I can't do that. Okay, cool. What about renewal? Let's go to renewal. You already have a contract. You already have your product configured. You already have terms of service. Can you just say, click, yes, I'll take it for another year? Or do you have to have a human intervene right now? That's like a super simple thing to automate. Or what about expansion? I want to think about automating that customer journey, because that gets the machine working for me instead of me working for the machine. If every single one of those things takes human effort and slows down and puts process in between my customer and impact, then I'm just putting grist in the gears, and that's what causes me to deviate from from the growth trajectory that I wanted to be on. So anything that I could automate, why wouldn't I? I have a phrase for that I'm going to drop on you in just a second, Scott. So that's the first thing: automate everything that's automatable. Second thing is it is true that it's like an accepted truth that the bigger you are, the harder it is to grow. you know, I'm I'm $10 million, adding $2 million is easy. I'm $100 million, adding $20 million is a little bit harder. I'm $500 million, adding $100 million. These are all 20% growth rates, by the way. Whoa, adding $100 million, that's a lot. But that's only because we think that we're working for the customers. What if the customers were working for us? And this is something that AI native companies and PLG companies understand. There are actually users that are using our product that are part of those trust networks, part of those referral networks, that can pull new customers into our system. And if you can get this working literally only at this a scale, Scott, of 1 in 100, if 1 in 100 users of our system will refer one other customer into the front end of this funnel, we can start to tip into super linear growth instead of sublinear growth. So these two things, automating everything that's automatable and getting growth loops to work for you wherever possible, can actually unlock some of that capacity above what just your existing system could do. So just to bring that all home, I've got like 3 more slides. In the old world, in the old view, SaaS native, we think about hiring people. I'm going to hire a person with a good network, good skills, good experience. I'm going to hire another person with a good network, good skills, good experience. I'm going to give them a quota. They're going to do amazing things. I'm going to put things in place to support them. That actually doesn't scale. That depends. What happens when you need to hire your 1,000th superhero and your 1,001st superhero? You're going to run out of superheroes pretty soon. What we need to do is flip that. We need to define processes first. Like, what is the process that's going to help my customer get to impact? What are the systems that are going to help me systematize that? And then how do I plug people into that? The left-hand side would be like running a basketball team on a superstar. The right-hand side would be like running a basketball team on a game plan. And that's what we got to do. We got to program it into our businesses. A lot of us, Arvind Krishna, the CEO of IBM, just said the era of AI experimentation is over. And he doesn't mean don't experiment. He means you've had time to experiment. Now you got to put it in place. And the risk right now is super scary to step in the waters of automation, to step in the waters of AI. The waters are moving really fast. It's scary to step into fast waters. It's even scarier to miss the boat. So the mistake is not that we're going to step in too soon. It's not ready. The mistake is that we're not going to start getting experience with it. And so the last thing that I want to say, and then I'll probably hand it back to you, Scott, is there's a book by Will, and I'm forgetting his last name, called Unreasonable Hospitality. And this is a book about restaurants and about hotels. Unreasonable hospitality. So has nothing to do with SaaS, has nothing to do with technology. But he's got a quote in there that is really, really germane to what we're talking about right here. And that is, automate the predictable. Thank you, Will Guardia. Thank you, Ken. So that you can humanize the exceptional. So we're not removing humans from the system, but we're deploying them where we need exceptional experiences, where we need to go solve exceptionally hard problems, where we need to do stakeholder management, where we need to go breathe confidence into our customers, where we need to go break log jams. That's what we humans are really good at doing, and machines can't do. But if we've got humans tied up processing orders for renewals, or processing kind of expansion orders, or running demos the same way day in and day out, where a machine could have done that, why don't we just automate that stuff so that our humans can deliver the uniquely human experience?
Cool. So, Dave, thanks. First of all, I want to make sure that I took the 2 key go-to-market things from AI native companies. One, where you had it under the phrase "automate the automatable" or "automate everything," was really about, I think, getting faster time to value for the customers. I think the point that is very poignant there is, these companies are giving prospects value out of their
Yes.
product before they're even customers, right?
Yeah.
and that starts to accelerate the trust, et cetera, that is so important to get people to write a check. And then the second part is kind of this feedback loop of users becoming um, becoming your best megaphone, really. Whether it's in communities or just one on one or whatever, but they're very good at getting this sort of virality driven by users, which will always be substantially more cost efficient than the traditional pipeline gen or demand gen and pipeline management stuff that we do. So those are the key points for from AI native GTM. Is that fair?
I think that is fair. Yeah, thank you. I think that's a great summary.
So let's a couple questions. First of all, just a little bit of a fear mongering, if you will. So you had that interesting slide about the efficiency crisis in the public companies,
Yeah.
and the whole left two-thirds of it or right two-thirds of it were basically you suggested they're unsustainable because investors aren't going to keep paying for that type of economics. Um, Same thing in the private world, because I mean we've got a ton of these companies out there that are just have crappy economics right now.
Mhm.
Um, wh- any guesses what's going to happen if they don't apply some of these learnings and get to a better place?
Yeah, same thing in the private world. The most demanding shareholders in the world, in my opinion, are the private equity guys. Um, Even more demanding than venture, definitely more demanding than public. And they are demanding Rule of 40, and they're tired of a profit only Rule of 40. It's fine if you're profitable, you can go forever. That's fine. It's not like you're at risk of extinction. But none of the PE guys like having their highly profitable, low growth companies. So they're pushing really, really hard right now. Those companies won't go extinct. But the companies who are in that kind of two, three, $4 acquisition cost, or not acquisition cost, but cost of a net new dollar of ARR, they actually are gonna go extinct. Like, they're not even invited to the PE party. Like, they don't get purchased, they don't get rescued, they don't get bailed out, they get restructured, and then they get eaten. And there's a lot of Walking Dead companies out there that have to figure that out.
Yeah. Well, that's part of why we're doing this particular session is to try to help these companies that might be in that situation
For sure.
take some of these learnings and find a way to get more efficient. But
Hey,
cou
I'd never been in that situation, Scott, but I have. It's very uncomfortable. You have a lot of uncomfortable insights about your business, and yet you're scared to go work on them because, you got to, because you have a bit, let's say you have $100 million business. You don't want to go destroy value by destroying pieces of your business. But the fact is you don't have any value. Like if you have a company that's in program shutdown, you don't have any value. So
yeah, you may have revenue, but that doesn't mean value, right?
yeah,
Oh, well, you showed it. Growth is the, what, 50% R squared, so, a couple questions. So, assuming that a company's products are suitable for kind of a PLG and or sort of an AI native go-to-market motion, where do you see most companies get hung up either, you know, transitioning to these motions or augmenting their traditional SaaS motions with these motions? Like, is it around worrying about price cannibalization? Is it sales compensation? What do you see people struggle to kind of move into this new generation of go to market?
those are definitely two things on the list for sure. There's all sorts of reasons why I don't want to change. Like humans don't like to change. We just don't like. We have lots of things to say about the proposed change that's going to come mess up my world. Like if I make money based on quota, don't mess with my quota. If I make money, based on, the way that I'm generating leads right now, don't mess with that. But those are like human kind of resistance things. And by the way, they'll kill your company. Like if somebody says, I have a friend who's an attorney, he says, AI can't do my job. I'm like, really?
Yeah, seems like one of the easier ones.
Yeah. I think I know you're really smart, and I know there's stuff that is exceptional about what you do, but how about automating everything else? And he's just not there. Like those are the things that are going to kill us. So when I talk to teams, and I'm lucky, Scott, because often I get to work with teams who've already broken through these three things. But these are the three things I got to get in my head. One is mindset. that generosity mindset that you talked about, delivering value even before the contract, that's a mindset thing. A commercially driven person who came up through the same kind of ranks that I did might be thinking all about dollars and cents. If you can shift your mindset to, hey, how about thinking about making an impact for the customer and then let the revenue follow? Let's say that recurring revenue is a function of recurring impact, not the other way around. I literally see people, and I've been guilty of this, say, hey, what if we make a 2-year contract or a 3-year contract? Then I got them locked in. Then I don't have to protect that revenue, right? Uh, I'm sorry. Let's start with delivering impact, and then the rest is going to follow. Let's not start by locking in our customer. That's just deferring the inevitable. That makes you walking dead for longer, but it doesn't make you not walking dead. So a mindset thing. I'm going to get in an empathy and generosity mindset. Then I'm going to have to think about talent. I actually have to, if I want to run these experiments, I got to put my very best talent on it. Wait a minute, I need my very best talent in my core business. Do you? Maybe, but your core business is already built. This thing has to be built now. I got to go figure out how AI is going to help me now. I got to go figure out how to automate these workflows now. And I can't use a second-rate engineer, a second-rate product manager, a second-rate systems thinker, analyst, marketer. I actually have to put together, it's a small team, it's 5 to 7 people, but I got to put together a best and brightest team to go figure out the new horizon, because that's what your competitors are doing in an AI native world. That's who's attacking you right now with an AI native perspective, best and brightest. If you're going to compete against them, you're going to have best and brightest. It's against a small piece of the business. I get it. Clayton Christensen would say this is a disruptive innovation play, and you're going to carve these out into, into a distinct unit. They're called growth teams in Silicon Valley, but that's the second thing, talent. I would call that talent. So if one is mindset, two is talent. And the third thing is timeline. We really want to solve all of this, by next quarter or for this quarter or to land our fiscal year. Probably not going to happen that fast. Like to automate something takes some time, and to figure out what should be automated takes some time, and to go run 5 experiments so that one's going to work takes some time. That's what all of our competitors are doing. They're launching 10 things. They find one that works. They promote it into the core. They go launch 10 more things. They find one that works. They promote it into the core. That becomes a flywheel over time. Let's just learn from them, and let's go fix our business over time with the best people and the best mindset.
Interesting. Makes a lot of sense. So, as you know, Scale Matters is all about kind of helping companies get instrumented and then pull relevant data and curate it into insights that actually help leadership teams make better decisions, right? So let's talk about instrumentation a little bit. You talked about it when you had your bow tie model up with the various CRs. What do you think? How does this whole sort of earlier impact generosity mindset that you said, as well as the user-led growth, how does that impact the instrumentation? Have you thought about that at all?
Oh, for sure. No, we've thought a lot about that, and it is. It's tough. If I'm not, let's say I'm a human-led business, with sales-led business. If I'm not instrumented today to the bow tie, both halves of the bow tie, by the way, how do I get a customer into the system? How do I uh, deliver impact, retain, and expand that customer? If I don't have that instrument for my people-led business, forget about bringing robots in. They'll have no idea what to do. And forget about running experiments. You'll never know if your experiment worked or not, because you can't actually see it. So I'm going to have to be instrumented. I think it actually raises the bar and raises the urgency on exactly what you do at Scale Matters, Scott. Like, we have to be able to see how customers move through the customer journey. And if you want to get even more complex, we got to be able to see it by business unit or go-to-market motion. Like I said, SMB, mid-market, enterprise. And if you want to get even more complex, which we do if we're running experiments, you got to be able to see it by cohort. Because now I'm going to run my AI cohort as a carved out a subsection of new customers, and I want to see how it performs against the normal cohort. That's like an A/B test. All right, so I got some instrumentation to do if I'm going to see my business at that level of detail, and a lot of us haven't done that.
By the way, we had one question from Rand. What does instrumentation mean? I think we're using the term to mean effectively configuring tech and processes so it generates data that you need. If you think about a car, right, you got all these sensors in your car. That's instrumentation that ultimately produces data that some computer analyzes, and then it says, "Hey, your left tire is low on air pressure." Right? That's an insight driven by the instrumentation. So that's what we mean is putting the sensors into your motion, so it produces the data that you need. Dave, in my opinion, most growth stage and mid market SaaS businesses have done a terrible job at instrumenting their go to market
Mhm.
engine. Um, you still have like the go to market people are just largely thinking about the left side of the bow tie. Finance is thinking about the right side. It's part of the reason we're trying to bring these things together. But one of the reasons is it's hard because
Yeah.
you need to think through. All right, if this is our strategy, what does our data strategy need to be to support that, right? And then we've often expected the revenue leaders to be the ones that could actually implement this instrumentation, which I think is ass backwards, pardon my French, because they're supposed to be the beneficiary of it. We would never expect, the finance people to implement the ERP. You're going to have, people who are specialists at that. So, my question is, do you expect the instrumentation in these PLG and AI native motions to be any better? I'm thinking you're saying it has to be.
They built a different way.
It's built into the product offering itself.
Yeah, but it's not built in the system. When I say we, I'm gonna say uh like SaaS native. And when I say they, I'm gonna say like PLG and AI native. That's not how we all grew up. I get it, but it just helps us. So we built a system where kind of our system of record, as you said, it's in CRM, it's in finance. Um, they built a system of record that's in the product and it's in tools like Amplitude and Heap. So they can see the whole funnel. They can cohort the whole thing. They had to fine tune this thing and cohort the entire customer journey. It may not tie back to their finance system, or maybe that kind of wiring is a little weird. And then when you try to add salespeople in and add CRM, and CRM speaks a totally different language, and so you have to kind of reconcile that. But the base level of instrumentation for a PLG company is way better. One of our customers, Canva, they come in, they can track everything about the user experience, um, awareness, acquisition, activation, monetization, everything. They can see every little thing. They can run A/B tests. But when they bring salespeople in, like, how do I run a sales process? Like, what does discovery look like? What does qualification look like? Where does that information go? Does it go in the product system? No, it goes in a CRM. Oh, well, how do those two things talk to each other? So both have advantages. We're gonna have to get them to talk to each other. But as Mark Benioff says, and he has a horse in the race, so discount it for what it's worth. But I believe he's right about this. We are the last generation to manage human only teams.
Interesting.
If you're going to run a human robot team, they both need to have a game plan. It's got to be written down. Like the robot's got to know what she needs to do, and we got to know what we need to do, and we got to know where the handoffs are. That means it's got to be instrumented.
So 100%. A lot of these companies, probably a lot of people on the audience today, their products don't lend themselves nicely to um, PLG type motions, right?
Sure.
Or they don't easily allow for self service and get earlier impact. What do you suggest to them? Um, Suck it up. You can still have generosity mindset, even though you're gonna have to absorb more cost there,
I've
or what?
I've tried that. It doesn't work. I've squared off with CEOs and heads of revenue with scaled companies who aren't predisposed to already believe that. That's a hard sell, Scott. And then I said, well, why don't we go build it over there then? Like, you got your business over here, we'll go build it over there, and then there won't be any channel conflict, and we won't have that. It just doesn't work. You don't have the long-term executive commitment. So what I think you want to do is go figure something out adjacent to what you're currently doing. Let's just assume that you've got a highly configurable product that does not lend itself to self-service activation. Okay, cool. Well, what could be automated? Um, SAP is literally launching SAP, by the way, SAP, like the most behemoth and and clunky and kind of software in the world, is launching a sales agent right now. but it's not to sell, it's to configure pricing.
Mm.
So, and we've seen these kind of CPQ things, configurators, and so they're automating that and they're putting it into a generative AI model and they're putting an agent against it, and it's writing shotgun with the salesperson. So the salesperson can go quicker, doesn't have to do that stuff on her own. Amazing. I can automate that.
There you go. Get David's book, August 26th, called Freemium. There's good stuff in it. I've seen bits and pieces of the content. I'm excited to see it myself. Thank you all for your time. Dave, thank you. I'll always enjoy chatting with you. You
There
always
you go.
prompts my brain to go a little bit harder than it otherwise would. So I
Amazing. Thank you, Scott.